presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
This is awesome. Come on, Parlez-vous. We're going over to Paris. What's happening?
Hey, Tom, it's Adam from Paris. How are you, sir?
I'm doing great. Adam, yourself?
That's good. Long time no talk. I appreciate everything you've done for me and my family over the years. So,
well, we appreciate you growling problem with us.
Yeah, sir. I've done gold reports and all the softwares and all your books and read it. Generational thank you.
Thank you so much. Appreciate it.
Yes, sir.
Now, Tom O'Brien.
Good afternoon, everybody. Tommy O'Brien coming to you live from TFNN. Friday, 3 p.m., 1 hour left to go in the trading day, and we got quite a market right now, and markets coming up to session highs almost. We're trading right now. Talk about an acceleration, even since 1 o'clock. Market up almost a good 30 points. We got a high out here at 6,025. We're trading at 6,015. S&P's up by 1.2%. NASDAQ 100 up a similar 1.2%, 258 points in the green. We're coming up to the session highs, and you got a high there yesterday at about 21,935. Dow, look at that acceleration early, 42,978. Dow up by 1.1%, and the Russell up by 1.5%. All the focus on yields right now. Check it out. I got a little bug running around. It's not stopping. We got lower price, higher yield. You got the 10-year above 4.5%. And there it is. And you talk about a move, man. There's 4.5. 4.51 is what we're at right now as I speak. Early this morning, we were at about 4.38. So you're seeing it up about 12 basis points. But on that spike yesterday, you got a print of a 4.32. 4.324 at 8:30 yesterday morning. Okay, and that is correlating to this spike right here. When you had higher price, lower yield, you had the 10-year, and look at that blue line. Look at it. This is like just the consult. Sometimes it's not that crazy, folks, you know, as in this is going all the way back to July of 2024. That was the high in December of 2024. That's the area you chopped around. The highs in March of this year as well. And where do we turn around? Almost to the tick, man. Almost to the tick. 111.15, and just like that, we're down 1.5 points. So where are we heading? Well, probably 109.12. Another 17 ticks lower. The market's convinced. We got quite a jobs number, man. And the Fed's not cutting anytime soon, regardless of what the president says. And I guess that's why I was trying to figure it out, the mentality. Why do you go for a point? Why you go for a point? Because why not? Why go for a quarter point? You go for a point because cheering for a quarter point on strong data doesn't make sense almost anyway, right? Wages are up. Pay attention to the market reaction, folks. Now, we talked about the 10-year. Okay, you jump over to the 2-year. The 2-year is trading off the Fed. And the 2-year just traded down a whole 0.5 point, which is, I'm going to pull it up even. Okay, in terms of the yield curve right now. The 2-year is up 12 basis points. Okay, so the Fed's not cutting. They're not cutting anytime soon. They're definitely not cutting a point. And the 2-year is up 0.5 point, which is how we trade in Fed terms, right? Man, it's a big move. We jump from yields to the dollar. And on higher yields, you get dollar strength. Okay? But we're just back to where we were on Wednesday in the same reprieve. But yeah, you're a solid almost buck, a full point above where we were on the lows. You made it to 99.337, which was about a full point from those flash lows you had yesterday. Dollar's still well under 100 though. But these are decent days, just like on the S&P and the NASDAQ. We're going to see how the volume comes in. But we got quite a candle going on at a very important technical area, and I imagine we're going to get some volume on today's close. Tesla clawing back some of yesterday's losses, up by $16, up 6%. Look at that volume yesterday, right? Yeah, similar area. You know, you look at the highs of 2023. Wonder if the top of this bar is going to be an area of resistance now. That's what I find myself looking. You're looking at a weekly right now. Okay, this is going to be the weekly. You're not going to get as much volume as we got at the low, but you're going to get a lot of volume. Yeah, you know, and that's yes, there was nothing like. I mean, look at the volume yesterday, nothing like it. The whole world was watching, right? Makes sense. I'm sure there's a lot of money made and lost yesterday. But boy, that's going to be a tough one to get over on a weekly basis. You start bumping up against that 350 area. You know, I could see maybe you're looking for some action, but you start getting Tesla into 350. It's going to take a lot to get over this point, which is where you got to on May 12th, and you've rolled over from that point. All right, let's jump around to some of the equities today as we get strength across the board. Amazon, quite a bit, up by 2.6% right now. Look at this run, man. The animal spirits are alive again. You know, if we're at 140,000 jobs, I think we had quite a scare on Wednesday with the ADP number, and the market saying, no, there's nothing here to say this economy is weak right now. 140,000 jobs, wage gain still at 0.4%, and Amazon's up 2.6% right now. Microsoft up 0.6% right now. Apple, they're up 2.2%. Little volatility on Apple, right? $3 price range, up and down. And there you go. Google shares up by 3%, catching a bid. Check out the chip stocks. NVIDIA up by 1.5%. AMD up by 0.8%. All right, we'll jump around to some of the airlines. Yeah, look at this. Delta up by 4%. Yeah, these are some big numbers. Yeah, so that high on Delta, May 12th, you're looking at a high about 53, 56. And boy, that's some volume there. All right, be careful on Delta right now. You know, you're looking, this is an area. Look at that volume the day of May 12th. Let's put it on a weekly. Yeah, you had volume the week of May 5th. And it's just lighter volume. We're catching a bid, and you'll have decent volume this week, but not really decent, I guess, in that context, right? You're talking about 38.2 million shares, and you're going to beat out last week, but remember, last week was a shortened trading week, okay? You got to come in with 43 million shares if you don't want to be the lowest volume weekly bar going back to February 17th. So low volume there on Delta coming up to that high and the pullback from May 12th. All right, folks, stay tuned. We'll come back. We'll take a look at some other equities that are on the move today. We'll take a look at Lululemon as well, trading lower. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. So Trump announcing that the U.S.-China trade talks in London next week. Yeah, Basil and two other Trump admin officials will meet with their Chinese counterparts in London on Monday for renewed trade talks. All optimism in this market. Not sure what's holding it back right now, man. As in, we got quite a charge higher. We're through the jobs number. We got 139,000 jobs added. And you have the unemployment at 4.2%. And you have wages coming in at 0.4% on a monthly basis. You multiply that times 12, and that's not quite how it works, but you can. You annualize that monthly rate, and you're talking about 4.8% wage gains. All right? 4.2% unemployment, man. Remarkable. And that's the unemployment rate there. And we're just chopping around, man. There's no reason why the Fed is going to really rush things right now. Forget me. Apologies. And how about federal government employment, right? It's going to be interesting to see where that goes. Shrank by 22,000 jobs. We could have some bigger ones now coming. Federal government has now shed 59,000 jobs in 4 months, is what those numbers show. Healthcare. Employment rising by 62,000 jobs from the previous month. We're already almost a healthcare economy. All the jobs coming from healthcare. And yeah, that puts it lightly. It's the basic sentiment. Fed officials have indicated they'll hold rates steady at their meeting in 2 weeks, and few have built a case for cutting rates in July. The employment report does not show the kind of weakness that would see them change their stance soon. Why not just push it back? Right? Just push it back. Why get ahead of yourself with a little uncertainty? And if we didn't have so much recency bias in terms of low rates, etc., I wonder if all the pressure would still be on to cut to the same degree. We've been at zero for so long. Nonetheless, jump over to Tesla shares. Up $12. Yeah, look at that. Oh, be careful. Be careful here, folks. Tesla just dropped what? $5 since I went to that commercial break at 3:15. All right, we got a technical top here. Interesting where we are. 6,025, you touch 6,020, we touch 6,020 almost to the dot again, and we're coming in for the final 38 minutes of trading right now. We'll see if we get a little selling actually coming into this market right now. Yeah, we got Apple rolling over. Amazon's been extremely strong. Google as well, man. Look at this, Google up by 3%. All right, we jump over to Lululemon. So, quite a day for Lulu. Down by $20, man. Now, they make a lot of goods outside. I think it's 40% in Vietnam. You have Sri Lanka in there, 10 or 11%. Cambodia in there as well. I'm learning a lot about where retailers produce their goods and where they come from. And the numbers weren't as bad as you'd expect for a loss of 20%. Okay? But they have some problems, and I think that they're probably being light on the problems they have. Look at this thing. You go back 5 years, you're pushing the lows. We got lows of 226 out there of last August. You have the tariff lows out here of 239. But on a weekly basis, you're going to do more volume this week than you did at the tariff lows. Yeah. And depending on we finish out the session, you know, you get below, what's the open there? $249. Yeah, we're not going down $15. Hey, you could. You're down $65 right now. We'll see how this day finishes out. There's a lot of strength, but we're giving it up slightly. But man, that's going to be volume on a weekly. Let's put it on a monthly. We're only 6 days into the monthly. But look at the volume on the monthly already. In last month we did 36 million, and we've already done 27 million. Yeah, look at that chart at Nike, man. Just jumping around to some retailers. Be careful in some of these retailers, man. From 179 to 62, and until you get a real break here of this trend, right? And that's not a break. You got volume at the lows. This is a monthly. Let's put Nike back on a weekly. And all that's doing is taking the top of 179, folks, just match it up. And, you know, you could almost make the case that the line of the best fit, I'd put it somewhere like there, right? Even you could almost just start the trend line from here. You could start it almost from the highs here. It matches up pretty well, but it also matches up to the highs you had back in 2021. And, yeah, you're catching a bid, but Nike's got some issues, man. Dick's is buying Foot Locker, so they're chopping around at that price point. We'll take a look at Dick's. Yeah, I think that trade lower was Foot Locker. Look at this one. Look at this volume drop off on Dick's. You get a pop higher on their numbers. And every single day we're doing lighter and lighter volume. Yeah, I think that was the Foot Locker saga right there. May 15th, potentially. Is that it? We'll have to pull it up. Yeah. Yeah, that was when Dick's was buying Foot Locker. It's a lot of share loss, and you're chopping right there. Stock drops $30. You got tremendous volume, and even on their strong numbers on earnings, look at this volume. You know, just follow it. 2.4 million, 1.9, 1.7, 1.1, 1.2, 1.1, and we're at 509,000 today. Yeah, even look at the weekly volume compared to last week. Last week was a shortened week. Wow, that's an earnings week as well. All right, Dick's up by 0.8%. We jump around to some of the retailers. Walmart shares down about 0.5% right now. Take a look. Pulling back a little. Target shares. Interesting. Target up by 3.7%. What do we got going on with Target here? Let's take a look at Target. All right, we got a little volume. On a weekly basis, nothing really. I mean, look at this acceleration on Target, right? You're catching a bid today, and you got as much volume this week as you have last week when it was 4 trading days last week. And on the daily, there's nothing here with this move. TJX up by 1 percentage point. We jump over to Kohl's. There you go. Retailers catching a bid, man, on this on the economy. Kohl's up by 3%. All right, we're building a little bit of an acceleration. Look at the volume in Kohl's, though. All right, same deal. Look at this drop-off in volume recently. All right, folks. And yeah, talk about a reversal. We got higher yields, and you got the home builders. You know, one of the plays, you ever think the Fed's about to cut, right? You want to do a rotation trade. If you nail that trade, the home builders. Because, man, they were doing well earlier in the week when we thought ADP was going to drive down and let the Fed cut. But that doesn't seem to be what's happening. D.R. Horton. We're coming back with our man Besfer. We'll talk some real estate, folks. Don't go away.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the 2nd and 4th Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. S&P is up by 65, NASDAQ 100 up by 230 right now, and we do have yields rising with that 10-year up to 4.51. And as we do on Fridays at 30 past the hour, folks, we're going to jump over to our man Besford Behuli, and you can reach Besford, the website, folks, for Tiger Real Estate, tigerstpete.com. You can jump over there, of course, and we'll have Besford's number up there, and you can always just email me, Tommy@TFNN.com, to get you in touch. Besford, good afternoon.
Hey, Tommy. How's it going?
It's going great, man. I appreciate you coming on the program. So let's jump into it, Besser. What are you seeing? It's been a couple weeks, and boy, I was talking to you earlier today saying we got rates spiking today, but they've been pulling back. We're still only at 4.5 on the 10-year in general. We pulled back a little at almost 4.3 on the 10-year. But what are you seeing right now? Maybe we kick it off in terms of mortgages, rates, and then just talk to us about the market and what you're seeing. I know you're talking to people every day. You're doing showings out there. You have products, places on the market. What are you seeing?
Yeah, so, right now, as we all know, the rates are the toughest part. So I think we spoke last week about this. I have a client, over 800 credit score, and the rate he was getting was still 6.75.
Yeah.
So this is huge, right? So, and then, APR too comes into effect as well. So this is pretty high. And then you add in the mortgage and the taxes, and, it gets pretty tough to buy, most properties out there right now. In this case, he was trying to buy a triplex, and he was going to live in one of the units.
Okay.
But, after you put, all those numbers together, still didn't make too much sense, but I think he's going to go move forward with this. So over 800 credit score, and, the rate was still at 6.75.
Oof.
So pretty high, yeah.
And, and of course, folks, you got the mortgage, but then you have, and we talk about it all the time, especially when you're talking about, and it's a phenomenal plan, folks. I was fortunate in Tampa. I got a duplex. I lived in one side, rented out the other. It's an amazing opportunity, and that's great. So is that what that person is doing best, or they're going to take that as their own home, right? So they'll be able to get, ideally, a 30-year mortgage as a personal residence while they're purchasing a multi-unit?
Yeah, that's what they want to do. They want to live in one of the units and, rent out the other two.
Yeah.
And so, in that scenario, a lot of things are cheaper, especially interest rate as well as insurance as well. So insurance is through the roof, and we'll talk about that a little later. So,
yes. No, but it makes sense. I just want to it makes sense because it's, for if somebody's buying a multi-unit, folks, for an investment, there's obviously a higher likelihood that they're going to default than if they're buying it to live there themselves. So that's part of the reason why you're getting a mortgage at a lower interest rate. And, we want to encourage home ownership. But I tell you, folks, as somebody that got in, I wish I had done it. And hindsight, we live in. I'm okay, the regret. But we all would have. In terms of buying property, Bestford, every single year, right, from 2013, 2014. But for those young people out there, there is an opportunity there, man. You get into, I think if I could do it again, and, things are so high like you're talking about right now, but if you need somewhere to live anyway, every single year, you need to live there for a year. And if your life circumstances change, okay, then yes, you can usually move. But when you get into a mortgage, what I think a lot of people don't even know, Bestford, is that it's only a year, though. You could literally get into a 30-year mortgage, and you could tell the bank that I'm going to live here for a year and a day. And they'd be like, no problem. That's in the terms. As long as you're going to live here for a year, we're going to give you a 30-year mortgage, right? And so it's a cool deal. And I was fortunate. But, hey, you got to time the market to a certain degree. And, boy, it's very difficult to do it at these rates and at these housing prices, and you combine them, right?
Yeah.
Let's talk about insurance because, the debt's enough, and then you have escrow on top of it. And what are you seeing in the insurance market right now? I know we talked about that as well.
Yeah, earlier I ran into an article where it was saying that the average premium in Florida is about $6,000 a year, compared to the rest of the United States. I think it was just under $2,000. So, Florida, we're getting hit pretty hard with the insurance. And then, on top of that, these prices are so high that your taxes are a lot higher as well. So it's just a combination, of really expensive payments, going on here.
Yeah.
Yeah.
And I guess people can always try and get some quotes out there, right? Because you really do got to be proactive. And it's kind of where we've been dealing with this before, of course. And it's like we We had the roof deal, just the insurance deal, and now you have the hurricanes that are always an ever-present thing. But it is interesting, Bester, and I just had to pay insurance for one of the properties in St. Pete, and that was about $6,500, like you're talking about, insurance. And this particular property, folks, needs a new roof. So, it's interesting you bring this up, though, Bestard, right? Because I just dealing with this, and you know the property I'm talking about, okay? So that insurance, $6,500 was the insurance that I just paid on that property. And I'm saying, you know what? That's not too out of whack for a large house that it might need a new roof, and maybe I'll get the roof and revisit it. But it's amazing, $6,500. So I was like, man, and it's a larger, older house, folks. It is. But that's like we're talking about, trying to make sense on a cash flow perspective. Boy, you're talking about a big house with a mortgage, with insurance is $6,500. You got taxes or I think $7,000 maybe on that house. So right away, folks, you're paying $13,000 or $14,000 just for taxes and insurance. And then you're talking about you got a debt service, a $600,000 house, easily. Very difficult to make that one happen. Yeah.
Now here's some interesting things about new construction. So since we're talking about insurance, so all those Tiger homes that you guys built, the insurance quote we would get, and they wouldn't, because they're brand new, basically, that we didn't even need to do an inspection on them. They were all under $2,000. So we're talking about these big, beautiful homes over $1 million, and you're only paying like $1,750 a year for insurance for those homes.
Amazing.
So,
and they were block homes, right?
Yeah,
beautiful block homes.
Right?
That my dad is building.
Windows,
we're building.
Yeah. So that's another thing too, that you can end up saving a lot of money by buying a new construction home. Not only that, but you save a lot of money on electric and everything else.
Exactly. I was going to say, and the house we're talking about, that I'm talking about, folks, is an old house. I mean, I think it was built in the 1920s. Okay, may have even been owned by Al Capone at some time. I'm not kidding.
Yeah.
But it's and my dad, I remember him telling me, Bester, the same deal. Those new houses, because we were dealing with an insurance crisis in Florida, of course, and he's saying, it's just wild, man. The new ones, but that's because they're so well built. You got the beautiful windows, of course, the storm windows, the block building. Pretty wild, but you add it up, and then the electric.
This particular house, the 6,500 one, a few years ago, it was paying $14,000 was the insurance quote.
So I'm getting a haircut at 6,500. Yeah.
By shopping around, you gotta wait.
That's it. Yeah. All right, let's finish this up, folks. Stay tuned. We're gonna talk more real estate. We got the S&Ps up by 63, Nasdaq 100 up by 218. Don't go away. Bester and I are coming right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. Tommy O'Brien, Bester Behewley. We check back in on the markets. S&P's up by 62, NASDAQ up by 216. We check in on Tesla, and Tesla up by $11 right now, up 4%, but we've given back some of those gains. And let's talk a little bit of land, Bester, if we can. I know we're always talking lots. I know you have, of course, some lots for clients that you have up there. I'm always dealing with some lots myself, but talk to us for those investors out there. We got a lot of investors that like in terms of lots, land, development, builders. How's that going?
Yeah, so there's a lot of action out there with lots, and what we're seeing, at least in the Tampa Bay, Pinellas County area, is there's just a lot more lots available because of all the houses that flooded, right? So
yeah,
not most of them, but a lot of these guys are just selling their house for the land value, and they want to get out. A lot of times these houses were so small and so old that it's not really worth fixing anymore. So they're just getting out. So, there are lots in some areas have been impacted, where they are going down. But other areas, as you know, Tommy, they're going up. So it's all about location, where you are. And I just listed 8 lots in the Port Charlotte area. And interestingly enough, I only had one that was flood zone X, meaning not in a flood zone. And the other were all in a flood zone.
Yes.
Guess what? The one that wasn't in a flood zone sold within a day. The other ones, not so much luck. So,
okay.
Location and flood zone is a big factor as well right now.
Yeah. And if you're around this area, folks, especially anywhere in there, it's a traumatizing deal, to put it lightly. I mean, I remember last October, Bestard, right as it happened, my dad was doing a open house, and I believe you were there, and we had people showing up that had literally, folks, they were right like inside or outside the flood zone, but they were literally on the line, and they were literally like, the house or two down flooded, and they were like, it's time to get out. We're going to buy a different house. Even us, it's obviously a scarring deal that people are living with down here. The other side of that is that you build it right, which is why those lots are going. You build it right, and a lot of those lots, prime lots in terms of being near the water in Florida, and maybe you just spend the money for a high-end property. And on the luxury side of things, people are doing okay, right? Yeah.
Some great areas there, the very nice neighborhoods. These were some of the homes that were built in the 50s and 60s and 40s, one story. So they all pretty much got wiped out. But around it, you have these multi-million-dollar houses. So these developers are going all in, tearing these houses down and building up, and there's still a huge demand for, new construction, as you can see. We see it as soon as a new construction goes up. And, as long as they price it right, because sometimes they go a little crazy on the price, but as long as it's priced right, it goes pretty quickly. So new construction is still in high demand, As we talked last time, these homes that they need a lot of work, You know, they're having a very hard time, understandably. You know, it's just too much work.
And, you know, as I was just looking at it, I was taking a look because we were talking about the numbers, right? And you're talking about the numbers of a multi-unit, and we all kind of know it. But just looking at, I just pulled up a mortgage calculator, Bestard, and I put in a home value of about $650,000. I said maybe somebody puts in actually 20%. So that means you got to come to the table, folks, with $130,000 right away. You're getting 6.48. It just generated the number in there, so about 6.5%. I just wanted. You're paying $36.54 a month is your monthly payment. And what's remarkable there, though, is that you're talking about annual payments of $43,859, and that doesn't include, what did we just say? Insurance could be easily $6,500. That gets you to $50,000, and then you have taxes in there. It's a beautiful $650,000 house, folks, and especially if it's an investment property, it's not going to be homestead. All right, you're paying $7,000 or $8,000 in there. So you're and then we haven't even talked about fixing anything. Okay, so we're already at $58,000 with taxes, insurance. And you know, it's a big number, folks. It is.
Yeah,
it's,
and I would go even higher on the taxes. I would probably go.
I'm trying to be like conservative, you know, to say, and then you know, this is a house that I just might, you know, I might put a roof on right now. That's $21,000, let alone right, not even doing that. But let's just say you come in with a property that's new, like we're talking about. You can see why people want to, folks, right? If you're in the market selling a place, Bester and I talk about it all the time. Get it perfect, man. You're not going to get the money back. You're not going to make money on the money you spend, right? Which normally might happen. You come in, you put in, a kitchen, you put in a brand new roof. You're just going to be able to make sure that house gets sold at a market reasonable price because people don't want to spend the money when they're already stretched on the payments, which makes sense.
Yeah, and everything is so expensive, you know, labor, material, and most of these guys are so busy too, the contractors, that it takes a long time too to get anything done. So we're definitely seeing that, you know, everything kind of stretched out, but you know, things are still chugging along, and you know. Hopefully we don't have a bad hurricane season this year.
No, that's always, and you know, make sure you're protected for insurance, folks, because you never, you know, make sure you got what you need in terms of the shutters, because you know, if you're around in this area, man, the devastation that we saw last year, of course, and you can't necessarily prevent flooding, but boy, do what you can, because it is a real deal, and it's always like spikes up, man. Make sure you're protected. Insurance. Listen, I was paying that $6,500 insurance bill, but you always pay the insurance bill, right? It's like that's not even close, man, in terms of what you're risking out there coming into hurricane season, of course.
Yeah, and just remember, if there's an active hurricane out there somewhere, you won't be able to buy an insurance. So you got to do it before there's something's happening.
Yeah,
so don't wait.
And make sure you're protected, folks. Take a look at whether it's, you know, your deductible. Sometimes you can look at what you're dealing with, whether you're at, you know, a 5%. I think
that's a big one. Yeah, between the 2% and the 5%.
Yeah,
that's a big one. So look into that, and sometimes it's not that much more, right?
No,
to pay between the 2 and the 5, because you know it's a big difference when the deductible hits. So
it is. I remember looking at that myself. Yeah,
because I had a client like that. Yeah, they chose a 5%, and their deductible was over $20,000. So basically what they needed to be done was under $20,000, so they got no
every
money.
time you're going to end up paying it almost, right? Exactly. Where it's like you're going to, a lot of time. I mean, put that in context, right, folks? So you're talking about you got a deductible that's 5%, okay? You got a roof that needs to be redone for $10,000 or $15,000. Yeah, you're just going to be on the hook for all of it. That's a mass. It's almost an emergency plan, which that in itself is okay, all right, because you probably got more than $20,000 in equity in your house. But boy, I don't think a lot of people realize, Bester, that they're paying for insurance out there, and they're going to get a bill potentially, and they're going to be responsible for it all, just as their deductible. Yeah.
Yeah, it's huge. Always got to read the fine print.
Oh man, and yeah, I guess we're always watching this yield market. We talk about it, man. And what do you maybe the last? Do you talk to people? How are they getting over these rates? Are they trying to say, because your person that's getting into the multi-unit, that's a tough one. They got to live somewhere, right? What is that person doing? Are they saying, I'm getting in now, maybe rates come down, or are they just saying, I'm not renting anymore?
I think there's a lot of people that are just on the sideline, and some of them are just kind of sick of waiting, so they want to get going, see what happens. And I always tell people, if it's a decent property, decent deal, just go for it. You can't lose.
And you're putting the money in the rent anyway. Part of that payment is equity, as small as it is, and that you're getting back. Well, Bestrid, I appreciate it so much, man. Thank you so much for the update. Folks, give Bestrid a call. If you need to reach him, just email me. If you can't find it, I'll send it over. Tommy at TFNN, and we'll talk to you next week, Bestrid. Have a great weekend, man.
Thank you. Have a good one, guys.
You too. We'll be right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Yeah, Tesla shares. You were pushing the lows of the session there. Down 4%. And if you're getting in this equity, like I mentioned, be wary of the top of this bar, man. Okay? That's matching up to, you're talking about the sell-off from February 24th, which is where the market began selling, and you're going to have some huge volume out there in Tesla, but another story out there, and it's just, the reality television going on, man. So as this was unfolding yesterday, XAI was trying to raise $5 billion as this was unfolding in real time. Morgan Stanley, yesterday afternoon, you got to imagine this, right? Can you be a fly on the wall? These bankers watching this happen, watching a $5 billion deal. Can you imagine being the person that has to sell it? They're doing just fine, whoever's selling $5 billion of debt for Elon. They're doing just fine at Morgan Stanley. But they gathered a group of executives from XAI to pitch Wall Street. on why they should lend billions of dollars to a cash-burning, high-growth startup, and you might as well add on to that, comma, run by a man that is feuding with the president in real time. During the call, the AI execs, the ex-AI execs, spoke about the company's data centers while they presented. Investors were following the social media attacks. And basically what it comes down to is that they're looking to raise $5 billion for data centers, and they're probably going to have to do it with either a sweetener, whatever it may be. Morgan Stanley is hoping to sell the debt at 100 cents on the dollar. Okay, the bank's in the middle of selling $5 billion in debt, which would be used to help build out data centers that the company needs to train Grok. Imagine this, right? Oh, what's Grok? Oh, $5 billion. But here's the kicker, right? Is that already, okay, X's outstanding debt traded down to several points to around 95 cents on the dollar. They were thinking of pushing that out at 12% already. They're going to need a sweetener. We'll see how it plays out. Quite a day for the markets. S&P's nearing the highs. We're up by 1.05%. 6,009. Folks, thanks so much. Listen, have a great weekend. Have a safe weekend. Enjoy your time out there. I'll see you back here Monday morning at 9 o'clock in the morning on Monday, folks. Have a great weekend. Thanks so much, everybody.